The clock hits 3:20 p.m. on a buzzing New York trading floor in 1986. Martin Zweig, eyes glued to his screens, watches the Dow plunge despite positive earnings reports. Everyone's panicking except Zweig. He senses something deeper. His secret, a blend of market momentum, interest rates, and Fed policy dancing together. What if I told you he turned these puzzles into a formula to pick winning stocks and beat the market? Let's crack his code. Zweig zeroes in on momentum as the market's heartbeat, but it's no blind chase. Understanding momentum can flip your investing game or sink you fast. In the late 1970s, Zweig noticed energy stocks surging while others lagged. Instead of following the pack, he tracked momentum patterns, stocks that kept outperforming despite market noise. His call on Alcoa paid off handsomely. Momentum wasn't luck, it was a signal screaming buy before the crowd joined. Imagine momentum like a snowball rolling downhill. It grabs speed and mass, each share bought fuels more buying, pushing prices higher. Zweig's genius was recognizing that once momentum builds, it feeds on itself, creating a self-sustaining surge until it suddenly collapses. By tracking momentum early, Zweig avoided panic selling during short-term dips. Investors often sold out at lows, but recognizing momentum's strength meant holding through storms. This translated into outsized gains and fewer heartbreaking exits, proof that patience with momentum pays dividends. The Federal Reserve moves quietly, but it shakes Wall Street's ground. Zweig learned to read its whispers before the headlines, ignoring the Fed. That's like sailing blind during a storm. Back in 1980, Martin Zweig correctly forecasted Paul Volcker's steep interest rate hikes long before most investors caught wind. This foresight helped him avoid heavy losses in interest-sensitive sectors like real estate and utilities. He wasn't guessing. He studied Fed statements, bond yields, and credit growth patterns in sync. Think of interest rates like traffic lights at a busy intersection. Green means go, investors pour money in stocks. Red means stop, they pull back. Zweig saw these rate changes as more than numbers. They were signals controlling investor behavior and market flow, allowing him to time entries and exits precisely. By decoding the Fed's rhythm, Zweig anticipated when bulls would charge or bears would roar. This led him to hold back during tight money periods and strike aggressively when liquidity flowed. His model turned Fed policy into a tactical advantage for timing trades. No guesswork, just signal reading. Selling is an art few master. Zweig's mastery was spotting when fear morphs into opportunity, using data few dared trust. Knowing when to sell isn't a gut call, it's math and mood combined. In 1987, before the infamous crash, Zweig watched debt volume creep dangerously high alongside a market froth. Most ignored it, but Zweig signaled a cautious exit. His warning saved thousands from catastrophic losses. The lesson: debt acts like a loaded gun, heavy borrowing inflates bubbles waiting to pop. Think of investor psychology as a weather vane. When excitement peaks, it means stormy sell-offs ahead. Zweig used sentiment surveys and trading volume spikes to catch these mood swings early. Instead of selling on panic, he sold on data that forecasted panic, turning fear into a calculated tool. By mastering fear's rhythm, Zweig transformed sell decisions from emotional roulette into precision strikes. Investors who followed his signals exited before crashes and re-entered early in recoveries. It wasn't magic, but disciplined skepticism paired with timing, the cornerstone of winning on Wall Street. Remember that frantic trading floor scene? Zweig's eyes weren't just on numbers, they saw the patterns beneath. Momentum's rhythm, Fed's secret hand, fear's pulse. Winning on Wall Street is less about luck and more about tuning into these signals early. Try this next time you watch a stock spike or Fed announcement. Ask yourself, what's the momentum, the debt, the psychology? Make those your compass. Subscribe for more book summaries like this one.